You're watching Fox 10 Arizona Morning with Ron Hoon, Rick D'Amico, Andrea Robinson, Kristen Anderson, and Corey McCloskey in HD. Coming up.
Hey, good morning, everybody. Yeah, if you are if you're married and you're filing your taxes separately, or you have rental property, you could be looked at very closely by the IRS, but not to worry. We've got some help for you coming up.
Hi, welcome back. Tax deadline is just around the corner. Now you have till Monday to get your taxes in, and that is the 18th, so the IRS has given us a couple extra days, right?
Right.
Because today is the 12th.
Today's the 12th.
Yeah.
The 15th is Friday. Yeah. Okay, but beware. There are two types of audits getting a lot of attention this year.
Well, there are two types of situations that send out a red flag.
Exactly, and you don't really want to be in that sort of group.
So Diane Ryan is live with more on this. Diane?
Okay, that was the bad news, guys. I'm going to give you the good news. The good news is, number one, I am not getting a refund, which is bad news for me. But for a lot of Americans who are getting a refund, we're talking about an average of $3,000. That's pretty good. Now, according to a Capital One survey, they are saying that most Americans have no plans to save that $3,000. They're going to spend it. And here's a good reason why they're going to spend it. They've got a lot of reasons for doing that. A lot of us, according to this study, have a lot of credit debt, and we also have a lot of mortgage debt as well. So many are saying that they need that money to spend on everything from gas to food to clothes, because all of those things are going up. And we want to take a look at the numbers here to see just exactly how people are spending it. 23% of people are spending that refund on everyday expenses, 11% on new clothes, 6% on vacations, and 4% on computers and electronics. And as we come back to us live, I want you to see all of the awards that our CPA we're talking to has today. Shauna Wilkerline, and they call her the tax goddess, and which is a very nice thing to say, but you are actually very, very professional. You have a master's degree in all of this, and you were the one who kind of alerted us to these audits, that they're fast and furious, and they're going after a couple of taxpayers, and we're talking about people who have rental properties and also people who are filing separately if they're married. So what's the problem with these?
Well, one of the biggest problems, if you have rental properties, a lot of CPAs don't know how to properly classify you. There are three main levels. You can be a passive investor, an active investor, or an actual real estate professional. The IRS is going after people specifically labeling themselves real estate professional, and a lot of CPAs don't know what that is or why you should or should not take that. And it can be very dangerous if you classify yourself as that and you're not really that.
So what should you classify yourself then?
Most people are really considered active investors when it comes to real estate. They're making management decisions, even if they have a management company, but aren't spending more than 750 hours or spending more than their regular W-2 job.
And what about married couples filing separately?
One of the biggest issues coming here, there's a lot of people that have decided, listen, we're about to get a divorce, or we've just gotten married and one of my previous, the husband or wife has some previous debt. They don't want to be involved in that, so they're doing married filing separate. You have to include 1/2 of your spouse's income and 1/2 of your spouse's withholding, because we're in a community property state. The IRS knows it, and a lot of people aren't doing it. So it's very deadly if you don't know that.
So I understand that it's just days away. You've even got it circled on your calendar when the taxes are due. I love it. You've been pretty busy?
Oh, absolutely. We've been working about 14-hour days this week. So.
And it's probably going to be like that right up until the day they put it in the mail.
Absolutely. I'm very much looking forward to the 15th, the 18th this year. There is an extension. The IRS has given us until the 18th this year. So.
And some people, Rick and Andrea, are going to need that extension. But not me. I already know I'm not going to get any refunds.
I have a question for her.
Yes.
Okay, ask her what she's going to do on the 19th.
We want to know what you're going to do on the 19th when you're done with all of this. You going on a vacation? You taking a vacation?
I am. I'm taking my 2 fabulous dogs, and we're going up to Prescott and spending a week in the Pines. So.
Oh, nice.
Absolutely.
I'm gonna take my dogs and go with you.
Absolutely. We'd love to have you.
That's funny.
Sounds good. Sounds like a great plan, doesn't it, guys?
Relaxing, quiet vacation.
Absolutely.
I used to do stories like that in the past, and I always asked the CPA, what are you going to do on the 16th or the day after? I'm going to Honolulu. I'm going to Hawaii. They work so hard. They need a week off.